All right, so we're live Monday. Hope everybody had a good weekend. Hopefully, you're able to celebrate the Easter long weekend, I guess, and just take some time to recharge the batteries, things like that. Yesterday we had a Globex CL trade, and today looks like there's a couple of trades that I guess validated for the New York session. So there is the stop now for the New York trade for NQ. And ES is still playing out, so we're going to keep watching that, but not sure that's going to be any better. Just give me 1 sec so I can just check things off on my side here as I was in this trade. I'm just going to download the image. And this trade took 2 hours and 35 minutes. My goodness. It was a marathon. And it was all drawdown. It was all drawdown. Interesting story, when I was looking at the two of these, I didn't want to actually take NQ. I wanted to take ES because ES was the stronger pair. And also that because it closed above the midpoint, it had a 79% chance to tag the IB high. And it also had a 76% chance to tag the IB high in like overall, whether it closed up or down prior to any of that, right? So, but the news is just, this is just crazy. It really goes to show that, like I was saying to you last week, if we start getting Trump speaking or any sort of war type related news, like these types of setups just go like in the garbage. But once again, nothing is 100%. I personally just played the probabilities. NQ has failed today. ES technically hasn't failed. CL was a winner, even though it didn't tag an entry. And then MGC was low probability, in my opinion. Yeah, risk management, Ezekiel, exactly. So as long as you're risking, I guess whatever your allotted risk is, then you're okay. I know with Mr. Zink, we've seen, I think he talks about, 1 or 2 micros, or sometimes he goes with 2 to 4. But as long as your risk is defined, you're okay. Another thing to mention too, it's like you don't have to take both positions. You know what I mean? And the way you can kind of decide on which one to trade can come down to a few things. The first thing is which one tags first, right? That's the easiest way, right, to validate or invalidate which position you'll take. The second idea is to literally just play the probabilities. Which one has a higher probability? So that's the second scenario you can take. The third scenario is you actually look at the asset and see which one is performing stronger or weaker depending on the direction you're trading, and take that trade, and just wait. So for example, today with NQ, we knew that NQ was the weaker asset at first, only because if you look over here, ES is moving much higher than NQ was, right? So that little tell could be enough to say, hey, I'll stick with ES today instead of NQ. And maybe you moved your stop loss to break even here, right? Or maybe you just let it play out, whatever the case may be. But once again, this trade still technically hasn't invalidated. NQ once again has. Just give me 1 sec. I'm gonna just blast a message out inside of our community just so everyone knows I'm live, just in case anyone doesn't know. So give me 1 sec. Okay, boom. So another thing you'll notice on my screen is I have VWAP kicking here. So how have I been using VWAP in these setups? I'm still kind of testing out how I want to use it. Right now, the way I've set it up is I'm just using the manual VWAP. So right, if you look at the bottom of my screen here, or if you just go to the forecasting and measurement tools and then just go to anchored VWAP, I'm using it and I'm starting at basically the top of the window, right? So if the window is 9:30 to 10:30, then I'm using the starting point from 9:30, and you can see right here. Oops. There. So you can see right here, I can drag this, and I'll start it right at 9:30 here. So you'll notice now I have like 4 different or 5 different lines on the screen. What do those lines represent? So the blue line for me is the VWAP. The top 2 lines are just upper bands, and the lower 2 bands are the lower bands, of course. And they just basically measure out some sort of deviation from the VWAP itself. And what was interesting when I was watching the NQ trade was like it was holding the lower band support here pretty well, which gave me some hope that maybe this thing's going to work. We had an SMT. Am I in the ES one? No, I'm not in the ES one. No, I was only in the NQ trade today. And the only reason I took it was because it triggered first. Had it not triggered first, I probably would have tried to take ES. I didn't anticipate for this type of reaction, like pure drawdown. I thought maybe, we see some movement into profit, and then we see some movement into drawdown, and then we wait and see what happens. So anyways, that's how I've been using VWAP. I've just been placing it at the top here. Another way we can use it is to place it at the beginning of the previous session. So I've been wondering how that plays out as well. So just to give you an example, let me see if I can. Here, let me get rid of this because this trade's pretty much cooked now. Already saved everything I needed to. So if I set let's just try London session. So 0300 to 0400. So this is going to give us a different range, right? And then if I use the VWAP from here, we can see how price responds, right? So if we look at what price is doing here, you can see at 9:30, let's just put the levels in here, 9:30 to 10:30. You can see how these levels are still being respected, right? So this is another way that you can also use VWAP to help you. Set it from the previous session and let it run. Now I'll show you what I have in terms of my settings. So once again, it's just the anchored VWAP through the measurement area here. I have it set to standard. I have all 3 multipliers on. The source is just standard. This is just the default setting. If you go to style, however, this is where everything changes. So I've removed the lower and the upper, which is the more the bands that are closest to the VWAP, and I'm using the outer 2 perimeter bands. I have a couple of settings where this one I have it saved. This is it was my crypto kind of setting, but I also have this setting where it takes away the higher bands and it just uses the middle bands, not the closest ones, but the middle bands. And then, of course, I just also have the VWAP by itself. So set that up for yourself. I know VWAP's a very important thing, I think, from what I've seen with the Edgeful data and how people tend to use the VWAP. I find it is helpful when it comes to this because if you're not going to use market structure, you can at least use volume. And it's always good to have additional filters in the mix for things. It never hurts. So just putting that out there. If you want to use it, go ahead. If not, and it just complicates things for you, don't bother. I'm not using it. I'm not using it to make any sort of decisions. I'm using it to observe price action through trade management. So that's how I'm using it. So for example, like I was watching how price was responding to that lower band, and it was giving me hope, right? And then I saw SMT at the bottom as well. You're using, so all this is using the VWAP indicator. So I'm not using the indicator, I'm using the tool. I'm using the manual tool. So if you click on the left here, see my mouse, forecasting and measurement tools, once again, go down to anchored VWAP, and then you can manually place the VWAP wherever you want. And I'm putting it at the beginning of either the current session window or the previous session window. And I mean, you can experiment with this too, and let's just say you want to use the Globex session range, right? So 1800 to 1900, 1800 to 1900. That gives us a goalpost starting from here. So, I mean, if I move it from here to here, we can see overall how things are going, right? As a starting point. And then here you can see we get a bit of a different look to things, right? So we can see prices has been responding to the VWAP until it lost the VWAP right now, right? So handful of different ways to use it and to go about things. I don't know if there's a right or a wrong way with this thing, because it's just volume and how you want to observe it. I've been observing it currently just with the current price action, but I'll be honest, when I'm using crypto on a higher time frame, I have been placing it on a previous on like a previous session block, just to see how it goes. So look at that bounce. Wow. This might actually work out, maybe. Who knows? We're going to observe it. We're going to see how this goes, nonetheless. Let me just reset this thing. Whoops, I put that on the wrong setting. Okay, there we go. The bands. Long setup, though, I will say. It was a long setup. Back to MNQ. And I was watching IVGs and whatnot today, but, you know, it just nothing forming for me there, you know. There's nothing there, so couldn't really do much. So we're keeping an eye on the ES trade. We already know the NQ trade failed. And what's interesting is if the NQ trade has failed, I wonder if, you know, does the ES trade follow suit, right? We don't know. So let's go to the agenda. So I wanted to obviously talk about today. I wanted to talk about my personal IB game plan and what I've kind of put together for myself. We can go over that through Notion. Today, obviously, here's the review. And then I also wanted to talk about yesterday, if we get some time, because there was such a nice setup yesterday with CL. It was just such a beautiful setup. And it played out perfect, you know. So let's start with today, I guess. Let me go to my channel here. So that's April 6th. So yesterday, I compiled the data, shared it with everybody, and we were looking at, you know, the different scenarios that were playing out. Now, when we were looking at them, I had mentioned how MNQ, MES, and MGC had all formed the high first and then closed above the midpoint. So this then put the probabilities into like a 50-50 kind of scenario. Now, I was looking at 6-month data, and the thing with the sample size is that given the state of the fundamentals, like the volatility we're seeing with these, you know, you could say they're black swan events or whatnot, they are like skewing the data for the future, because 5 years ago we didn't have what we have right now, right? 1 year ago we didn't have what we have now. So this is where like using 6-month data can help you. However, if you have 6-month data and there's only been one instance where this situation or this sequence has played out, and we're talking about the CL trade now. So yesterday the low did form first, it closed below the midpoint, and the data was saying with the 6 months sample size that there's a 100% chance that prices, you know, we should take the short, we should aim for the low. So I thought, okay, you know what I'm going to do, because can I really trust one sequence? The logical side of our, you know, process is telling us that you can't, right? You shouldn't, especially if we're relying on data. We need more data to back it up. So I went back into the data and I started looking at 1 year, 2 year, 3 year, and 5 year. And I want to just show you the 5 year, okay? So this was the initial balance breakout report, as I showed you, where it was saying if price forms the low, but then closes below the midpoint, 100% chance to the low, right? One occurrence. Okay, so not really sure we can rely on that. So then I went to the 5 year, and the 5 year gave us way more data. Okay, so the 5 year was saying that we now have almost a 72% chance for the low to get taken out. So the second I saw that, that gave me all the confirmation I needed to make that decision that I will enter that trade short. Okay, so this is how I am using it. Now I did say what's happened 5 years ago or 1 year or 2 years ago, it's not the same as to what we're seeing now in terms of what's causing volatility. I only use this because the data in the past 6 months, once again, just gave me one sequence. That's the only reason, okay? So given a day like today, and actually I'll just show you the CL trade. So this was the trade. We have the low, we have the high, and then we can see price closes below the MP at 7 o'clock, right? So I placed my limit entry at 114.04, stop loss a point above the high, TP a point below the low, and just let the rest play out. And within, what is that, 1, 2, 3, oh wait, this is 5 minutes. So 5, 10, 15, 20, 25, 30 minutes roughly, TP is hit. And, what was interesting about this model is that because you do a lot of the analysis on the front end, you don't really need to analyze too much as price starts to do its thing, where we just let price play out. I was at like a party, like a family. I was at a family house gathering. It was like a games night kind of thing. Some of my family were doing, and I would just kind of moved off to the side and just set this whole trade up for myself. I did this whole thing on my phone, and once I set the trade up, I just set some alerts, and then I went back to whatever I was doing. And it reminds me of kind of like also saying last week where you taking a trade and he was playing video games, right? And didn't have to endure any of the painful PA. And then you come back and price has hit TP, and of course that's a great feeling. Today, for example, I haven't really been watching the screen, and it's obviously the opposite, right? Where price took me out here. Now, what really is interesting is what we're seeing here with ES. So, there's a part of me that's saying, hey, why not take a chance on this trade, right? Because the probability is still showing 79% that it goes higher. But the risk management side of me is saying don't do it, because I already took a trade. I already took that loss. Now, if I had stuck to my initial logic where I was saying, hey, just stick to the highest probability assets, stick to the strongest asset of the two, I would still be in this trade, right? Regardless of what NQ did. And this could hit TP or it could hit stop loss. But there is a lesson to be learned here, I think, when you're seeing these two assets. And then once again, just to kind of back to the decision-making process of how to choose, right? Did anybody take ES over NQ, or did anybody take both? Not sure. Let me know what's up if you'd like to share. Only NQ. Any reason why you only took NQ? Was it for anything I said or something different perhaps? You're out. And let's just look at the news. Explosions heard. Closer to entry. Yeah, I mean, like, when I was saying this earlier today, like, it might be safer to trade Globex, to be honest with you. This is crazy. But this is really interesting, too. One thing I will also check is CL, because the two typically do the opposite. So let's just take a look at CL. And CL, you can see that setup. I really wanted to take the CL setup, to be honest with you, but it already tagged the exit, or the TP before the entry had tagged. And And it was pretty wild. But you can see now price is shooting higher here, given all the war news. This is really interesting. We're going to watch this. Because if this stat plays out, that's pretty impressive, honestly. Pretty impressive. What I'll do is I'll take it as a paper trade. Just have it set somewhere else. So paper trading it. Let's see how this goes. Same setup. And once again, I think one of my biggest concerns though with it is that NQ already swept that low. But hey, you know what? That's created SMT now at the bottom, right? Because NQ swept the low and ES didn't. But right, you can see that right here. I'm gonna just get rid of the VWAP because it's a bit annoying in terms of the view. Oops. So let's just get rid of that for a sec. So you can see the SMT here, right? We have a higher low here and a lower high. Or sorry, we have a higher low here and a lower low here. So that's giving us SMT on the bullish side. And then just to look at the data, once again, 76% to the IB high, 79% to the IB high if price closes above, which it did. And then this one was 71% and then 75%. And I wasn't taking into consideration the 100% inverted short because it was only one scenario. But we didn't have to worry about it because it already played out. Give me one sec. Sorry, my wife's just giving me a text. Just want to hit her back. Okay, so where were we? Let's go back to the notes here. Okay, so we talked about yesterday's short. Explained the data, how I was interpreting it from yesterday. We talked about today and some of the news. Let's go over game plan, okay? And we'll keep an eye on this thing. I have alerts set. You guys are obviously watching it too, so if anything changes, I'm sure you're going to pipe in the chat and let me know what's going on, what's good. Okay, so let me pull up my plan here. Give me one sec while I get that set up. So I put this together over Notion, similar to what I normally do and what I've always done in the past. One second. People invited. Publish. Oh, here we go. Okay. Okay, so sorry about the white screen. I know if it's a little bright for you, apologize. I can't really make this any darker. This is basically what I put together. I know I've had some conversations with a few people and they're trying to understand checklists and things like that. So I just wanted to discuss what I have going on with this. And then, depending on how you would like to operate, you can, take what I have. I'm going to make this available, I think, in my IQ thread. So look out for that. I'll share it there. But this is basically what I have. Whenever we're trading a model, it's important to put your game plan, on paper. You need to fall back on something, right? Like if you were to start some sort of an online business, you would definitely have a business plan, right? You'd put it on paper. Even if you had a brick and mortar business, it's the same thing, right? Trading is no different. So for me, we have the IB model. I'm using the Libra scale symbol because it relates to this. Now you'll notice I put futures, MNQ, MES, MGC, and MCL. I had put FX in here because I was monitoring it, but the reason I'm not touching it anymore is because there's too many assets. And it's like overloading me, so I've decided to just focus on the future side of things. So the kill zones, we have the AM session, right, for New York. Don't worry about this. But if you did trade FX, technically on Edgeful, it's indicating like an 8 to 9 a.m. window, but I know I've seen others trade 9:30 to 10:30 and be successful. So another one we can look at is the lunch hour, and we can actually look at that live. And then we have Globex strategy, initial balance, model. That says mode. It should be model. So here's my criteria. The first thing I'm going to do is obviously I'm going to go to Edgeful, right? The whole thing starts with Edgeful. So I gathered my data for each asset, and it's day and session specific. And then I make a short list of which assets and trade sequences that have the highest of probabilities, right? And I've shared how I do that, obviously, inside here, right? Like, it's basically this, right? So I'll compile all the data, and then I'll make a short list. And the short list is basically once I see what is confirming, then I can highlight what's in play, right? And then in terms of an additional short list, like really zooming in deeper, it's just understanding like, okay, if even though, let's say MES, IBL was playing out and it's below, but because the probability is low per the data, like I won't focus on that, right? So I'll then focus on something that's higher, right? It could be like say an 80% move or something like that, right? Or 88% short. You get where I'm going with this, right? She says, have you compared the states or the stats for CL 9 a.m. open to New York open at 9:30? I personally have not. I have not. I've just been focusing on the 9:30 window. But that's a good question. And the thing is, like, I only really started with Edgeful towards the end of March, anyways. So like, I'm fairly new to all this and putting it all together. And it's like trial by fire, right? You experiment, you see where other people who have been trading it longer than you have been successful, and I don't want to say you emulate them, but you kind of walk the same path a bit and see how that feels and how it works for you, right? Because, and I'll give you an example. Like I noticed with Mr. Zink, he front runs a lot of entries and has different ways that he goes about trading it. I personally don't want to front run the entry unless I start seeing that there's like a double confirmation, whether the price closes above or below, and it's still a high probability that it's going to head in the direction that aligns with the original bias, right? Then I might consider taking that entry and getting a better RR out of it. But other than that, like I said, you gotta figure that one on your own. But I will take a look at those stats now that you mention it, because it is interesting. You've been looking more at the 9 a.m. for that one. Like, I mean, do you have stats for it, or it did work today for 9? Yeah, it's interesting. I'll have to take a look. I'll pull up the IB in a sec. So back to the model. Then what I'm going to do is I'm going to go to TradingView. And once the IB range is closed, I can confirm once again, like I was saying earlier, each trading sequence per asset in relationship to the shortlist made from Edgeful. And then I would place my limit entry order at the midpoint, targeting the opposing directional bias. Stop loss placed a single point away from the IB swing point, and TP placed at the opposing IB swing point, right? And typically like a point away, beyond. So I think everyone pretty much understands this. It's pretty straightforward. I think what comes now into question are what I call reminders for ourselves, right? So what do I mean by that? Well, what I mean by that is scenario by scenario cases. So these are some things I've put down since I started doing this a little bit more aggressively, like really analyzing it and making my notes. So if I see some sort of interesting thing happen, I'll make a note of it so that it reminds me to not make the same mistake the next time I see it. So one thing is if Edgeful has an inverse sequence confirmation, to play it. And that's similar to that CL short that we had yesterday, right? Where the setup was for the long, but the inverse was showing us great results or probability to take it short, right? So I'm just reminding myself, don't have any fear in taking those trades because they do work out. Ideal Edgeful data scenario is to have double confluence with the main IBH, IBL stats with the above and below midpoint stats. So that's basically, if we look at this, it's basically aligning, like let's just take this for example, right? MES, IB high first, 75% to the low, and then if price closes below, there's an 88% chance that it is going to tag the low. So that would be a very good example of double confluence, and that's what I'm referring to there. If correlated assets reach the TP, front running the entry, skip the trade on the other asset. So what does this mean? That means if I'm trading, here's an example. If MES forms the high or the low first, but MNQ forms the high, what did I write here? If MES forms the high or low first, but MNQ forms the high or low first. Okay, that's a mistake there. Basically, it was saying if one forms the high or low before the other, and then tags the entry, don't take the asset that hasn't tagged the entry yet because it's already hit TP. And that's also, I think, what I was summarizing here at the second point. I'm not sure what I typed here. And the other thing I'll say too is maybe what I made with my typo here, what I meant to say was, let's say MES makes a IB high first and then an IB low, but then MNQ does the opposite. That's clearly uncorrelated, right? So you don't want to mess with that type of system or that trade. I don't even care what the probabilities say. I want things to be aligned as much as possible. Now you'll note I also put 6E, 6B, GC, and SI, but you can avoid that for now. When there's about 10 minutes left in the IB range closure, observe where the PA is located, and it's acceptable to take early entry if it gives, but to be mindful how the IB range closes per the midpoint stats, right? That's what I was talking about with that double confirmation. So taking yesterday once again as an example, I already had the data set from earlier in the afternoon, had posted in my Discord thread, and then I went off and I was with my family. I was only connected with my phone, and then I set an alert for myself just in case I forgot what time it was. Like I lost track of time, which I actually did, and I had set it for about 6:45, 6:50. So once that alarm triggered, then I went back to my phone, pulled myself, off to the side, because I like to be private with these things. And then I just started observing the data in relationship to how things were closing, right? So that's the beauty of the IB model, is you don't have to sit there for hours and hours and hours. You literally just get your data, figure out what the stats are saying, and then observe towards the end of the hour where that window closes what price is doing. Because it's pretty obvious for most of the time, if price is confirming, a long or a short, it's just dependent on what the stats then say in regards to whether it closes above the midpoint or below the midpoint, right? That's where things can get a little bit more tricky in terms of you having to use some sort of intuition to make a decision on whether you're going to take that trade or not, right? Now, I also made a note here saying take the TP early if it's desired. I only put this in there because it is important for us to remind ourselves that it's okay to take profit off the table. When I trade IFVGs, I've talked about how I just want to get in and out of trades fast. I don't really care about how high price goes or low it goes into the trade. Like, I just want to get 1R and get out. That's typically how I trade IFVGs. So I just put this in there as a reminder to let myself once again know it's okay to take TP. You don't have to be perfect all the time, right? If price is, banging at the door of your TP but not hitting it quite yet, it's okay to take that profit. You know what I'm saying? Now, another thing is, if I have an urge to move my stop loss to break even, I'm just putting this here to let myself know that it could be a good time to take TP, because the only reason you have an urge to move your stop loss to break even is because you're feeling defensive. You have a feeling of, I wouldn't say panic, I wouldn't say it's worry. I would just once again say it's a form of caution. Okay, and then in terms of the Edgeful data, I was originally looking at like 68%, but now I've shifted well into the 70s. It has to be definitely in the 70s or higher for me to consider taking a trade. And then in terms of the contracts per trade, like I'm looking at usually 1 or 2 contracts per trade on a micro, taking it slow. If you're using, now this really works best when you're with 25K accounts, I will say. And I know that Mr. Zink has been talking about 25K accounts for a while now, and how it's easier to get to the $1,000 target versus if you're on a 50K trying to get to 3K. So I thought there was something to that. So I do have some 25K accounts with Tradeify that I'm working through right now. So today I took a loss on one of them. But the other thing I'll say is I've also split my risk in terms of the accounts I use. So I only use specific accounts now for the New York session, trading IB, and I have a separate set of like Lucid accounts that I'm using specifically for the Globex. So I'm keeping them separate just so that I'm diversified. And New York being as, random as it's been, I'm just being very, very cautious that way. I do copy trade. I do. But like I said, I have a batch here and I have a batch there. And I have started doing that only because I remember Mr. Zink was talking about that before. I think he actually just reminded about it with a tweet yesterday, which is interesting. So, and then the final note is, in the event Edgeful data returns 100% probability, just to increase the date range of that sample size from 1 to 5 years, and just to gauge the consistency in that probability, because once again, like we showed with the CL trade from yesterday, because it had 100% for the short to go inverse, it was off of one occurrence in a 6-month range, right? And we can't really trust that. We have to make sure that there's been more occurrences to give us more confidence that the probabilities are in our favor, right? And that's the whole point of this model, is you're trading the probability. And of course, there's nothing we can do if there's fundamental news that gets involved. And that's part of the challenge with IB, if I had to think of one, is that, once again, if Trump tweets or if Iran says something negative about the war, that's going to take price in the opposite direction, potentially, of the trade direction you're taking, right? Like we saw today with NQ. So this is my game plan. What I'll do is I will share it, and I'll share it right now, actually. So if you go to my Trader X Kira channel, and then if you just go to Trading IQ, I'm going to just put it in there right now. IB model game plan. All right. Posted. I'm just going to delete this other message here. Okay, so let's go back to the charts. Let's examine what we got going on. I'm going to just move this to, actually I'll keep it double. And like I said, we were keeping an eye on this side of the screen, the left side, because we wanted to know if it would actually play out or not. But let's take a look at that lunchtime data. So 12 to 1. 12 to 1. What does that look like? Let's get rid of this. So here's that 12 to 1. So we can see low to high formed. I'm going to pull over the data. Okay, so back to Edgeful. Just going to get my... So here's New York lunch, MNQ, customize. I'm going to set it for Monday. Set it on all days. And the low form first, it's giving about a 54% chance to the high. We saw a price close above. Now these stats might be skewed just a bit, but you can see the data is pretty low, right? 59%, or sorry, 58% that it's going to go to the high, right? So it's not looking pretty good for that. in terms of the M&Q long, right? The long wasn't a very good option. Let's check out MES. You know what I'll do is I'll just move to ES for a sec because so same scenario, and if we go back to Edgeful, so MES for, oh, this is reset, lunchtime. So same scenario, about 54% because it closed above the midpoint. So you can see like that's not very favorable. And then of course it does the opposite of that probability because it was quite low. Let's take a look at MGC. And I'm just going to clean up this chart too for a sec. So we have the high form first, then the low, and then price ends up taking out the low. So what did that tell us data-wise? And I'll adjust the parameter to all days so we can just see what it says first. So if the high forms first and then the low forms second, 44%. So not really giving us much to work with. It did close below the midpoint, I believe. Yep, it closed below the midpoint. What does that tell us? The high form first, below the midpoint. There's a 33% chance that the high gets taken out, 50% chance that the low gets taken out. So when you look at these numbers, right, not much you can do with these, right? These are what I would say are low probability. And then we'll take a look at MCL too. Now, like I said, I've been keeping track of the lunch for the most part because I've seen a scenario where it played out successfully, and then I've seen a scenario where it didn't play out successfully. So here's the low to the high, and then the next candlestick confirms the target if we're looking at it from the bullish perspective. So MCL custom, let's just look at the all days for a sec first. So we have the low form first to the high, 64% chance. And then above the midpoint, maybe it increases it more, almost 73% chance. So when I look at that, I would be interested in that type of a long because I like that it closed above the midpoint and pushed up the probability into that 70s range, right? So I like that. So I would be looking for that long. The problem is, of course, it never comes back down, right? So that's the lunch stats for today. Not much, obviously you can see there, not much that really could play out. Now, one of the other questions was looking at the 9 to 10 range on CL. So let's take a look at that. 9 to 10. And if you have any questions, drop it in the chat. There's no stress here. Could you show where you made the post on your YouTube channel? Are you talking about the live stream, or are you talking about the game plan? Game plan? Okay, so if you just go to Discord, okay, my channel's right here. Let's change this to gallery. So I'll have Trading IQ, the Edgeful thread, the live streams thread for the YouTube, these replays, and then I have some affiliate links and discounts and things like that over here. You're just going to click on Trading IQ, and it's right here. So if you click it, it should open it up like this. Okay, and I think you can make a copy of it. I've set it so that I believe you can make a copy. And if you can't, just let me know. I'll go back through the settings. Today, Globex, let's hope it's a W. Yeah, like I said, it seems like it's been an easier asset to trade. An easier session to trade. Let's take a look at this, though. Okay, so MCL. Now, if I wanted to create like a custom search, all I'm going to do is just click this, click Create Custom, and I'm just going to hit the plus sign, and I'm going to just write... let me just put CL, just because we're only looking at it for CL, I suppose GC opens at the same time too, right? Technically speaking. 10 a.m. It's not overnight. Let's hit save. And there it is right there. So let's take a look at this. Okay, so CL. Oh, you have 8:30? Okay. So Monday, let's hit all. Now, what happened here? So we had the low and then the high. Price comes and tags the EQ or the midpoint and then goes up and shoots up to the high. So that's that long function. Now I'm doing something wrong here. One second. What did I do wrong here? It's not showing me. What did I do? Usually when that happens, it's something I did wrong. 9 a.m. to 10. Oh, right. There it is. It has to be that. It's not 9 a.m. to 10. Let's go back here. Create custom. And this should be 9 to 4, I think. Is it 4? I think it's 4. I think that'll be better. That do anything? No. Okay, well that sucks. Oh, it still didn't take the... Let's try this again. New York. Okay, there we go. I had to reset it. Okay, so CL, we have the 9 a.m. to 4 p.m. range. We have the 9 to 10 a.m. IB window. We know the low form first and then the high. Now, this is for every single day, first off. It's showing us that over the past 6 months, the average is that if this scenario occurs, we got about a 70% chance that price will tag the high. But let's customize this to the day. Hopefully, it gives us some data because before it did not. Okay, perfect. So on a Monday, 77% chance that it will tag the high. So that's a pretty good stat. And then we know it closed above. And you have a 90% chance. So what I like about the statistics when I start seeing like the 80s and 90s compared to what I've seen with the 70s and the 60s is that when you see super high probability like this, and if I scroll down, like, I mean, just to show you, I'm looking at the frequency, right? So to me, 6 months of frequency with these numbers is good enough. This type of frequency is not good enough, right? We would then want to push it to, like, say 1 year, for example, if it was the inverse scenario happening, right? And you can see there's only 2 occurrences, so I would then move it to 2 years. I'm just doing this as an example to show you the steps I take when I'm looking at this. Okay, so now that I have this many frequency of the sequence itself, I mean, this is better. But you can see that there has been a shift in the, I would just say a shift in the pattern, right? That is allocated there. And then once again, here's more data. Now you can see there's even way more data here. But the key is you don't want to have a sample size of 1, right? So we already talked about that earlier, but I just wanted to show you what I actually meant, like, and go through the steps. So once again, the IB low was formed first, then the high. We're using that 9 to 10 a.m. range, and I mean, CL literally hit a home run there. So that was a really good play. Might be worthwhile to take a look at because if the data is showing really good stats, there's nothing wrong with taking it, right? So do I have overall numbers for it? Nope, I do not at this time. But it did say 70% chance across all days, so that's really good because it's taking into consideration everything, right? Let's set it back to all days. Okay, so just to look at this, right? It's about 70 here, about 70 there. If we just go back to that New York, we can kind of compare it. And it's about roughly the same thing, right? So it's like a nuance type thing. in my opinion, right? Maybe specific days are going to impact those stats differently. So let's just check out Monday once again. So you can see the stats are impacting it, right? Because remember, we had a higher percentage of probability for CL when we looked at it from the right here. See, 77%, right? So might be something to consider. But we'll definitely take a look tonight for Globex and see what's going on. That's an interesting thing. Thanks for that, Tracy. That was a good tip. And it just goes to show, right? Like, you can check data on any hour you want, really, right? The key is to check the hours with the highest injection of liquidity, right? Those are the best times to play. And we know New York Open is the highest of everything. And then Globex is another massive one. And, of course, we have London. But I'm not sure how well London has been doing with the IB. I've heard some people say it's not been that good. Truth be told, I found GC and CL to be really, really good when it comes to IB in comparison to, say, MNQ and MES. MNQ and MES are sometimes some pretty, big wild cards. Today is a great example of that because the news just, of course, completely impacts the setup itself. But then with GC and CL, it was a little different. I just want to see one more thing, which was, if we use that same time for GC, what stats does it give us? So about 64% chance. And let me just double check what it did in between that time frame. Wow, that is very, very nasty. Here, you know what? Let's go to the 1 minute so we can get a better view of what it did. So it did tag the high first and take out the position anyways. So that's about 64. It closed above. And that was about 67. Let's just go back to New York. So 64. So, I mean, not too much of a difference there. Not too much of a difference there. Relatively the same. But it looks like with CL we had a pretty big discrepancy. So there might be something there to that, Tracy. So good looking out on that. We'll have to take a look there. And, if you want, we can maybe just do a quick exercise on the process of the steps for Globex. So if you guys are here, if you want to take notes, go for it. You know what? I'll do this with you guys live. I'll put my notes on the side here. So Globex. Okay, so Globex is set. This is how I basically do those stats with you guys. Now, because we're looking at Globex on a Monday night, it's technically for Tuesday, so you got to change this to Tuesday. Okay, so MNQ is saying that if the highs form first, there is a 79% chance it's going to the low, and if the low forms first, there's about a 67% chance. And you'll notice I'm just rounding up because I don't want to have to type 4 digits. It's just easier to round up. So that's the first stat. Then I'm going to move to the above midpoint stats. And so we have 67% chance that it's going to take out the high. So that means this becomes a inverted long position. And then if the low forms first, there's a 75% chance that the high gets taken out. So that's good. So that's good for the long there. And then I'm going to go check out the below. So this is giving us a 90% chance that the low is going to get taken out if price closes below. So I'm just going to look at the occurrences in this situation because I want to know if that high statistic can be relied upon. And when I look at it here, you can see that there's a very good sample size here. So I like that number. I like that sample size range. It's good. I'm going to update my thing to 91% to the IB low supporting the short. And then there's a 50-50 chance on the other side. So let's just check out the frequency. So you can see the frequency here is pretty low, right? So this is a great scenario where I'm going to move to the 1 year sample size and see if there's any change, right? So if the low forms first and it closes below, there's now saying it's 67% chance over the past year. Still pretty low sample size though, right? Let's move to 2 years. I mean, truth be told, it's not very interesting per se anyways, but it's still worth it to check. Okay, so now we have, you know, better numbers to work with, and we're seeing 71%. So I like this number. This looks good, 71% for the inverse short side of things. So I'm just going to put the range. So we know this is 71%, and I'm going to go back to 6 months, and it's saying 50. So I know that the range is 50 to 67% chance to the IB low, supporting the concept of an inverse short, excuse me. So let me just type that up quickly. Okay, now I'm going to move to the next asset. I'm just going to reset this. Okay, so we're on MES now, and if the highs form first, there's an 82% chance to the IB low, and if the low forms first, there's a 56% chance to the IB low for a inverse short. And I'm just going to double check that data for the numbers. So those are a little bit low. $50.50. Okay, so $50.50 now with better numbers, right? We're starting to really see, what's up. So we can see that we can say that that stat is pretty good, and it is low probability basically for the all days, right? So 56%. Let's see if it closes above. So here we go, 100%. What is that telling us? So we can see the frequency, right? 100%. So I'm just going to make a note of that, though. If it's above, it is saying 100%. And then we can identify the range. What's the IB lunch stats for today? They weren't very good. And everything kind of played out, I think, already. We just went over that. So, but they weren't very good. To the low. And I'm just going to increase the data range, so it's 50. I'm just going to update that one. 50-50. So that means neutral. But we're going to check out a higher sample size. So I know it's a little tedious, and I'm talking as I'm doing it, so I'm not going as fast as I normally go, but you can see that it is a bit tedious to go about it this way. So if the high forms first and price closes above the midpoint, 67% chance to go higher on the low side, or I should say on the bullish side, 64% chance that the high gets taken. So that's good. Data-wise, I don't know. Let's go one more year higher and see. But you're noticing that the stats aren't really adjusting too much, right? So that's telling us that the pattern can be trusted, that it is still, fairly low probability. These are better stats. So if the high forms first, it's now saying, and it's above the midpoint, it's now showing, about 69% chance. So to go to the high. And then on the other side, saying 52% chance. And we have, once again, better frequency in the data. So I'm just going to note this. Give me one sec. High. This is showing 52. Let's see if it's below. Let's just go back to the 6 months for a sec. So this was 100%, and then this was 50-50. Okay. Let's check out the other way below. Let's take a look here, see what's making sure what's going on. Because we were still observing MES. Now, this is hilarious. This is so funny. Wow. I really can't believe this. Take care. See you, dude. Yeah, we're going to wrap up soon. I just want to finish the data. Yeah, you really do, man. Otherwise, you're going to have a panic attack. Not bad a reaction there. I talked about it this last week, that there's a whole different stat about if price breaks the range, what percentage does price have when it retraces back into the range, like 25%, 50%, 75%. That's a whole other type of scenario. I'm not going to get into that today, but it is something I'm still observing. I just want to see. Yeah, these levels are so good. And these are just standard deviations off of the range itself, going both ways. So standard divs are the way to go, 100%. Let's just check out MNQ quickly. So MNQ failed. This, you know what? A part of me just wants this to succeed, I think just to validate my original gut instinct, which was to not take MNQ and to take ES. This is crazy, but like I said, we were paper trading this thing, right? So it is what it is. We were paper trading it for what it's worth. All right, give me one sec. All right, where were we? Okay, so MES, we did MES, right? Or was it below? We didn't do below. Okay, below 80%. It's good frequency here, not so much here. So 80% first break to the low, so that supports the idea of the short. 80%, and then saying 67% on the other side. And that's to the low, so that's a inverse short position. And that's with 6 months data. We're going to just take a look at higher cases. Excuse me. One year. I'm not really worrying about this stat. I'm worrying more about this. 651, 83% chance. What did I write down there? Yes, below the midpoint. 83% chance now. Let's take a look at 2 years. %. Wow. Okay, so these are better numbers, and it's supporting that higher range. So you see once again how I'm kind of going through the sample size just to confirm those numbers and see if that trend in terms of the pattern is still in sync, right? So it is, and I'm just going to adjust my data to just show that it's giving us about a 67 to 90%, 6 months / 2 years. Okay, and let's go back to 6 months again, and let us take a look at MGC now. Just curious, anyone in the ES trade? Anyone take this? I mean, that looks pretty good. Unless something happens. Let's check out the anchor here. Back above it, look at the support to the bottom band. That's nice. Let's take a look at one more thing here. Let's go to 3 in the morning. Nice. Good one. Good one, Finest. Yeah, stick to your guns, man. Stick to your guns. Look at that support, though. Bam. Nice. Back above the VWAP. Let's see how it reacts to these two. Be interesting. Okay. So MGC 88% chance to the low. So that supports the short, and there's a 67% chance to the low. So that's an inverse position. My goodness, a lot of inverse positions here. Inverse short. And I just want to double check the sample size because that's not very good. Put you on tilt today. It wasn't doing IB because it didn't trust it either. Would have been okay if you were in MNQ since I couldn't shake my inner bear today. Fair enough. Yeah, you got. It's sometimes it's better to stay out and not lose money whether the price goes to TP or not. It doesn't matter. You got to follow that gut instinct sometimes because it does keep you safe. Okay, so the IB high form first, 70% chance to the low. And this is with below the midpoint. So 70 to 80, that's pretty good. Mark that as 70, 80, and then this range I'm not liking too much. Let's get one more year and see what we have. Okay, so if the low forms first, it closes below the midpoint, we still have 85% chance to the low. So that is still supporting the inverse short. Okay, so we're done with that. Back to save. Let's check out MCL. Change this back to 6 months. So we have good occurrence numbers here for the most part. So we have 62% to the low and then another 62% to the low for the inverse. So let's just mark that down. 62 for the low and 62%. That price will go to the low once again with an inverse direction. And I just want to see. Yeah, I like that data anyways. That's fine. Those numbers are okay. So this is very low, but it's saying if the high forms first, it's going to the high 67% of the time. So that's the inverse long idea. The other one is 50-50. But let's take a look at the higher sample size. So these are better. So if the low forms first, let's use that. So if the low forms first and it closes above the midpoint, this is now giving us better numbers, but you know, those numbers are still not the best, right? If you really think about it, 64%. Remember I was talking about how you need to see in the 70s, right? Now this is still too low, so let's just go back higher. $835. Let's keep going. Okay, better numbers there, and still supporting the, actually this says shifted. %64 for the low. I think the problem is, once again, it's still too low probability wise, right? So that's 3 years data short. Okay. Let's take a look at the below data. Change this back to 6 months. So we have 70% and to the low, and this one's saying 100%. 100% to the low for the inverse short. Okay, so let's look below again. So this is okay. This is not so good. This is why it's important. You gotta go back to that data, right? It's an extra step, sure, but you know, you better be safe than sorry. So I feel like I'm missing messages here. Oh, I am missing messages. My God. Okay. Okay, so if the high forms first and we're below the midpoint, 73% chance it's going to the low. So update that number. And then the other one is 56% to the low. Wow. Another inverse. And double check the numbers. That was with 1 year, right? And we said with 6 months not giving us much data, right? So, but it's still supporting the short. So I'm just going to leave it at that. So that's it. I mean, we collected all the data. I put a list together. I'm going to share it right now inside of my thread. So just wait for it. So we got April 6th, Globex, 1800 to 1900 hours. This is for Tuesday. Just pretty this up a little bit. Now you can't see what I'm doing, but if you're inside of the thread, you will see it shortly. I'm going to double check my work to make sure I haven't made any mistakes, just because I've been doing it on stream. But this is what I have so far. And if I'm looking at it right now, in terms of what I'm seeing, I can actually go to it right here. I'm looking at the data. The goal is to try to play, once again, the higher percentages, right? So for MNQ, if we want to short it, we want to see these two scenarios, right? The high form and then it closing below. This is not attractive, right? The long might be attractive. In this scenario, same thing, 82% to short 80%. And then in this situation, you got a 69% for that inverse, right? Similar to this. Not sure I'm interested in that. MGC, this above isn't very good, but we want to see the high form first and then closing below. And then, this is just screaming for an inverse short. So I'd be really interested to see if that plays out for GC. And then with CL, the stats, truthfully right now, if I'm looking at Globex, the numbers don't really look that good overall. So, this is the beauty which I like about Globex is I can already see it and say to myself, the data isn't very good for majority of what I'm seeing. So I need very specific scenarios to play out or sequences to play out in order for me to even be interested, right? And that's the beauty of the data. So anyways, data's there for you. I'm going to go back on my end just to double check the numbers. And if I screwed up, I'm just going to edit it to make sure I have the most accurate stuff there. And I'm trying something a little different with these ones because I was looking at higher sample sizes just because I didn't trust the 6-month data because there was like one occurrence. So that's also in there. Let's go back to the setup just to see where we're at. And my goodness, if this goes to TP, I am going to laugh. I'm going to absolutely laugh. I appreciate you guys all hanging out with me today. A bit of a longer session. But I hope you guys picked some stuff up. Made some notes. Figured some things out on your own end, perhaps. If it's, no one's saying we all have to trade the same way. Yeah, no problem, Ezekiel. I appreciate everyone's support, by the way. Yeah, for sure. I wonder if this thing will just zip to TP. I wonder. Funny position. Let me see if I can find that tweet from Mr. Zink. Give me 1 second. So basically this was the tweet. So he had a tweet about if he had to start over, he'd pick up 5 Lucid 25K Pro accounts, trading 1 to 2 micros, and get to about $3,300. Then he'd have some payouts. Get the payouts, add some Tradeify growth accounts, do the same thing. His big messaging has always been to stop trading minis on 50K accounts, right? And I think with this model, it could work out very well. Because you're just dealing with base hits. That's it. Just take that base hit. I know the range is sometimes large, but the base hit meaning you're only risking 1 to 2 micros, right? That's the base hit. You're not risking, 25% of your account type thing. So, yeah, just wanted to show that to you guys because I that really hit me when I first saw it before, and then he shared it here. Yeah, it really hit me. So, and I think Tradeify and Lucid have been having some pretty good deals as well. So, whatever influencer you're using codes with, go for it and pick up some accounts. Now, the interesting thing about this is this messaging is based on if you're already funded, right? So keep that in mind. If you are on an account where I can't remember if the Pro is 1 day pass or not. I think Tradeify is. But ideally, with a lot of these types of accounts, when you already have the high probability setup, like you're trying to pass the account, like just pass it. Try to pass it in one trade. I mean, it's the cost of doing business, right? But you're still playing the probability of trades being successful or not, right? So, and then once you get funded, then you take your foot off the pedal and you start doing the 1 to 2 micros, right? So, just some food for thought. I think for me to like full port a setup, like I wouldn't full port this. I'd be looking for something in that 80% range or higher. So like that CL inverse from yesterday would have been a perfect full port because, like I said, I felt that trade was very strong from a data perspective. So like that's a trade I would be going full port with to try to pass the account. And of course, if I've already passed the account, then you want to take your foot off the pedal once again and rock that 1 to 2 micro setup. It's exactly like this. And the thing is, like with these types of trades, they stack up really fast. I was looking at my journal last night after I put in the CL trade, and I still have to journal today's loss. But there was 6 wins in a row since last week to this week, and that was from last night. So not bad to go 6 W's and then 1 loss, right? But if you're not risking your positions properly, then today's loss is going to crush you, right? Like if I had been like really, if I was just been like really euphoric about things and being like, oh my God, IB's goated and it's unstoppable. Okay, instead of risking 1 to 2 micros, I'm going to risk 5 micros on this trade, and then I lose. Like I'm wiping out many gains, right? That I've had many days of gains. So very, very important to make sure we stay grounded, we stay humble. You're following those, the rules and whatever those look like for you, and you're staying true to your system and your definition of A+, right? So there we go. So I'll leave you guys with that. Appreciate everybody's time today, and I'll get the link, like the replay link, posted later, and then I will be back for another stream on Friday. I have been asked about potentially streaming live during a session itself, say like for an IB session itself. So I'm going to just ponder on that for a bit and see. I think the best time to probably do something like that would be during Globex, to be honest with you, just because I know no one's streaming during Globex. And normally I would stream at 1, so I just push that stream later. So that's a possibility. If anything changes for Friday, we'll put an update out. But as of right now, I'll be streaming at 1 again. And we'll just review what's been happening in the week. You know where you can find me. If you have questions, hit me up. And other than that, I hope everybody once again had a very amazing Easter weekend. Just wish you and your family the best in health and wealth and just prosperity overall. God bless everybody. Have a good night.